Welcome to the channel. Thank you for tuning in. We don't even have time for an intro today. We're going to get straight into it. Yesterday, we talked about how the downturn was coming. We didn't know when it was going to come, how it was going to come, or what's going to cause it. But today is July 24th, and as you can see on the screen, the market is down significantly. We talked about yesterday how we were positioning ourselves to get ready for this downturn. I'm kind of hoping that this isn't the official downturn because we got a lot more to go. We got a whole lot more to go. The NASDAQ is down 3.5% today, 624 points. The Dow is down 426 points, 1%, and the S&P is down 2.5%. So I woke up this morning and I talked yesterday about the housing. Home sales is down 15%. New home sales, the lowest in 7 months. And that's just the beginning. We got a long way to go with this. 20% is an easy correction. And we might bounce back from this because normally a major downturn is triggered by something. And right now there isn't a trigger. We're just going down. Google reported earnings yesterday, pretty good earnings, but they're down like 10 points today. Normally you have something trigger like some type of bank failure, some type of really bad significant news. I believe the downturn is going to come when the Federal Reserve has to cut rates. When they cut rates, because Powell is already behind. Powell is already behind from cutting rates. And so if he has a surprise, they're talking about he might cut in September. If he has to cut in, let's say, the August meeting, or in September, he go down 50 basis points because he's already behind. We talked about yesterday about how a lot of truck drivers aren't getting work, or they're having to change what type of work they're doing because the consumer is weak. The consumer is already in a recession. Sadly to say, most people don't care that the consumer is already in recession. But when the stock market starts falling, that means people with money start feeling the pain. And that's when people start to care. You know, with the market being down so much this week, I don't know if this is it. I don't know if we're going to bounce back from here or we're just going to keep going down. But the main thing is, I just want to make sure that you're ready for this downturn. As I talked about yesterday, there's only been two opportunities, real opportunities in my life to really make really good investments. 2000 was one of them. 2009 was one of them. I took a little advantage of 2009. I was a little ready. Like I said, I was 66% stocks, 33% bonds. This time I'm maybe 60% bonds, 40% stocks. I wanted to go much lower. I'm watching my meta today down like 27 points. It's down from like 550s all the way down to 4 something. I hate that I'm just gonna have to ride it through the cycle, but it would have been one of the stocks that I would have been adding to. So as it falls, I might be purchasing at 250. I hate to say it, it might go down to $250. It might. But I'm going to be adding to my positions too early right now. It's not enough. It's down enough for me not to sell, but it's not down enough for me to be buying more. So the main thing, are you ready? Do you got enough money on the sideline to take advantage of this opportunity that we got coming? This is when money is made. This is when money is made. When we go down this much, and we got a long way to go. I mean, we got a long way to go. There's some people out there saying that this downturn might be worse than the Great Depression. That's what some people are saying. They're calling for stocks to be down 89%. I don't buy into that. That's a little too steep for me. But I can see it being down a lot. 20% is a bear market. We're going to hit that, and we're going to hit that easy. And if this is the downturn, and if Powell has to cut rates, he's going to say that inflation is down, inflation is under control. And so now they need to cut rates, and they're not doing it because the economy is going bad. They're not doing it because of that. They're going to be doing it because the stock market is going to be tanking. I haven't really looked bonds. I'm sure bond prices is on the rise, which means yields are coming down. I bought a T bill today. They're still paying 5.3% on a 33-month T bill. So I'm ready for the downturn, but not like I wanted to be ready. I wanted to be ready. I wanted to have this opportunity to make a boatload of money. When the market goes down like this, or it goes down as I'm predicting it's going to go down, as a lot of people are predicting. They put too much money in the street. We was too optimistic. There's jobs. People are probably going to start losing their jobs. They're already losing their jobs. All this stuff is already going on the street. People already know that we're in a recession. But they're really not going to take heed and take notice until the stock market falls and people with money start losing money. And this is only the beginning. 635 points for the NASDAQ is only the beginning. 3.5% is only the beginning. We got a long way to go. And my message for you all out there is, are you ready? Are you ready to take advantage of the opportunity that's here, that's in front of you? Like I said, I've been investing for 30 years. And I've only had 2 real opportunities where it was real easy to make money. And when it all falls, and as long as you invest your money into items that, as long as you invest your money in items that you know not going to go out of business, Meta's not going out of business. People like Instagram too much. People, they say they don't like Facebook, but it reminds me of McDonald's. Everybody tells me they don't eat at McDonald's, but every time I drive by, there's a line. There's a line. People say they don't get on Facebook, but Facebook is as popular as ever. What I wanted to do was, if you're not an individual stock picker, so that you're ready, first you got to have the cash. You can't be in, all stocks, or you're going to have to ride it down. My 40% of stocks that I own, I'm just going to have to ride them down. AT&T reported earnings today, not good earnings. Verizon reported 2 days ago, pretty much the same type of earnings, missed revenue by a little bit, met their earnings, reported free cash flow, stock was down a lot. I believe AT&T is up today because of their dividend yield. That's about the only reason I think they're up. But so if you're not an individual stock picker, I know I talk about it, but here's the culmination: a risk-free method to consistently outperform the S&P 500. And the reason why I show you that is if you read it, it could be purchased on Amazon. And if you read it, we talk a lot about the SPY. And if the S&P right here on the screen is selling at 5,440, that means the SPY is probably selling around $544. I think you're going to easily be able to purchase the SPY at 4,000. That's 1,400 points. So if it's down 2% today, $116, 14% is going to be over 20%. And as you start accumulating, as we talk about in the culmination, that's when you pretty much load up. You buy all that you can of an SPY. You don't even have to, at that point, you don't even have to really watch the stock market anymore. If the market keeps going down, if you got a job and you're working and you got extra money, keep buying. Anything under 400, you should keep buying. Because the SPY, this is America. The SPY will be back. It will hit 6,000. It will hit 6,000. We still got a long way to go down, and we're gonna have to build back up, but it will hit 6,000. So if you think about it, you buy it at 400, meaning the S&P is at 4,000, and I'm telling you, it's going to go up to 6,000 over time. That means you made 50% on your money, and you don't know anything really about stocks. But you got to be ready. You got to be ready. You got to have capital on the sideline. You can't be fully invested. But you got to be ready for this downturn that's coming. I was reading today, house prices is down, like I said earlier, down 15%. That's only home sales is down 15%, that's only the beginning. That's only the beginning. I'm probably gonna pick me up a house. I'm probably gonna be able to buy me a house. I can't sell my house right now because I can't move nowhere. Because if I sell my house right now and that the value is that, I gotta buy a house that's overvalued. And if I get a home loan, I'm probably gonna be 50% underwater. I'm gonna be 50% underwater because that's home prices are probably gonna drop by 50%. But I can buy a new house down 50%, and interest rates is going to be lower depending on how the Federal Reserve is going to have to respond to this crisis that we're going to be in. I'm not calling for 89% or 70% or anything like that, because as long as banks start going out of business or something like that, as long as something don't break, something has to break. And it could be a bank that triggers it. It could be something as simple as people are scared because the Federal Reserve are lowering interest rates more aggressive than what Powell said, who's the Federal Reserve president, the chairman. So if he have to cuts faster than what he predicted he has to cut, then we're going down. We're going down. So my message is to be ready, and then when it does go down, you can't be scared. You have to be willing to invest, and I'm going all in. Like I said, this is only going to be the third time that I had the opportunity to put all my money to work at low prices. In 2009, it was so bad. I was buying Bank of America at like $2.86, something like that. I was buying American Express at 10. I was buying eBay at the time at 10. Back then, eBay was a real powerful company. They were actually probably at that time, they were probably bigger than Amazon. And now we know where they're at now. But my message today is to be ready. Don't be scared, because we got a long way to go. I don't know how bloody it's going to get. But this right here, we're looking at the screen right now, and this is not blood. It's down a lot, but it's not blood. And my biggest worry is ETFs. There's money is not managed by money managers. A lot of money isn't managed by money managers anymore. A lot of individual investors don't buy individual stocks. Most people put their money in things like the SPY, which tracks the S&P, or QQQ, which tracks the NASDAQ, which that's also, we talk about that in the culmination. That could be a good investment. I really believe without a shadow of a doubt that the QQQ could be down 50% from its all-time high, because it's only going to take NVIDIA, Microsoft, Apple, Google, Meta. It's only going to take for those stocks to be down significantly, and the NASDAQ can easily be down 50%. And those have been the big winners for the last couple of years. So the big winners are probably going to be the big losers. So you got to rumble through all the things that's down significantly and decide where you want to add your position to. But as I said, I would pick up a culmination. Make sure you read it through, because in the culmination that we talk about this. We talk about this opportunity when the stock market is down 20% and being able to put your money to work. And then once it goes back, and in that example, the S&P going down to 4,000, the SPY at 400, when it comes back to 6,600, you're up 50%. So if you're able to put 10,000, 100,000, however much you were able to put to work, you'll be able to put it to work, and you'll probably be getting a nice dividend. You may have an opportunity that once if you buy at 4,000 and below, something like that, you may not ever have to sell those shares again. You're going to be up for the rest of your life collecting dividends on that SPY you purchased. I don't know if it's going to happen. It's July, as I said, July 24th, 2024. I don't know when the blood is going to be over. But if we get it something real easy, something that triggers it real easy, and then the federal government and the Federal Reserve has to come in and try to save it, you're going to kind of tell where the bottom is at. But it's really hard to pick a bottom. You're going to have to pick where you're comfortable going in at. So if you buy in at 20% and the market is down 40%, after you buy it, all thing I can do is say, just keep adding more. So don't be scared. Enjoy this moment. I just hope you're ready. I hope you're not all in stocks right now, because it's going to get bloody. It's going to get bloody, real bloody. because there's a lot of people out there on margin. They're going to get their margin calls called in. There's a lot of people out there buying calls. Their calls are going to be zero. So you just got to be ready. So if you got money on the sideline, you got money, whether it's in cash, but I wouldn't be in cash. I would strongly recommend T-bills where you can earn 5.3%. Now that's going to go down when the Federal Reserve start lowering interest rates. I hope they don't have to go to zero where, a couple years ago you couldn't earn no money on T-bills. They were paying you zero, no money at all. I hope we really don't have to go to negative rates like Germany and Japan where you're basically giving the government money and you're having to give them money because rates are negative. Of course, you don't want to buy no T-bills under those circumstances. But my message to you today is to be ready. Be ready for the downturn that is coming. I don't know if this is the start. I'm not going to stand on it that this is the start of the downturn. Because the market could bounce back and be back up 500 and something. I wish it does do that because I'm not ready. I'm not completely. I wanted to be ready. I mean, when I say ready, I wanted to have almost all cash, all T-bills. What's crazy is about a year ago, I started getting ready. I sold my SPY. I sold my SPY probably at, let's say the S&P was at 4,500. I thought we was overvalued at that time. We went up another 20%. We're going to fall below that. We're going to fall below that. That's how much overvalued I believe that we are. We're going to fall below that, probably significantly. I wouldn't be surprised if we don't fall 20% below 4,500. I thought it was overvalued then. And like I said, I don't know what's going to trigger it. I got to keep reiterating because I don't know what's going to trigger it. I don't know what's going to cause it, but I know it's going to happen. And I hope you take advantage of it. I hope you're prepared. Good luck investing out there and stay ready.